I love getting older. And what I love about it the most is having that 2020 vision of hindsight. For those of you that might remember back in 2008, after the crisis, now we're at the end. So there's a greater revolution that appears to be underway. But of course, inequality has been around, forever. People all around the world are really starting to recognize what is happening. And as you guys know, every con game requires confidence, and we are watching that confidence not just slip away because it's actually been declining for a number of years, but getting to the critical level. Wealth never disappears. It merely shifts location. And boy, oh boy, this is between March 18th and December 31st of 2020, where your average worker, so all those gig workers, low-paid workers, lost almost $4 trillion in labor. But guess who almost gained $4 trillion in wealth? The billionaires. Now, if this doesn't show how wealth never disappears, it just shifts location, because this is almost equal. So interestingly enough, in 2008, when we bailed out the banks, oh my goodness, everybody screamed. There are a lot of things that, that I'm seeing, and it really is making me wonder what the consequence, if these were intended or unintended. But we'll save that conversation for another day. However, this is a fact. Workers may be tired of seeing the fruits of their labor go to corporations making record-breaking earnings. The Deere workers evidently felt that the company could afford more, and just a few days later, they were proven right. So this is really what enables that income inequality. But, we got to save these banks. We got to save these corporations. It's way more important than the little guy until it isn't. And that's where we are in this cycle right now. Because I've told you this and we've known this. Worker pay by design never keeps up with inflation. When they set up the system to begin with, the fiat money system that I'm referring to begin with, governments like the inflation in the fiat money system simply because inflation is an almost invisible taxation, and people just accept it. So they don't have to go through legislation and make it more visible. But for corporations, they always wanted to pay you less. But if you were willing, if you were working for $20 and they wanted you to work for 10, they're going to go, no, I'm not working for 10. However, if they could devalue the currency so that the reality is they're paying you that $10 in purchasing power, then that means there's more money for them at the top. As we transitioned into a purely debt-based system where inflation is controlled by the central bank, and who benefits from whatever the central bank does are those that are closest to us, which are private corporations. So you can see, certainly, income and wealth inequality is supported by central bank inflation policy and government inflation policy. This has been true really since 1913 when they really installed it. But it went into full gear in 1971 after the Fed had full control over the rate and speed of inflation. That's what Nixon taking us off the gold standard actually did completely. The real crisis, which we never overcame, we just papered over it, happened in 2008. That's really when the system died. And then all of these experiments, what they did was push your purchasing power down. But as a reminder, average wage in 1971 was $9,500, and the average spot price of gold, because it was fixed, the official price of gold at that point, $42.22. Then of course that changed, but we're just talking about 1971. And that means that if you were paid in ounces of gold, you would have been paid 225 ounces, roughly. Okay? Well, if you never got a raise, but you were simply paid in the same number of ounces, going through the average spot price this year, 2021, with the average wage, wow, that grew hugely, right? More than 5 times more. And you go, oh my goodness, I would much rather get $51,000, $52,000 than $9,500. But a family of 4 could live with one wage earner on that $9,500. At $51,000, $52,000, it requires 2 wage earners, and you're still paycheck to paycheck, as evidenced by the stimulus checks going to people that made $150,000 a year or less. So if you had just been paid in the same number of ounces of gold, your wage would have been $399,688.54. And I'm pretty much thinking that would have kept pace with inflation. But the average wage, no, by design. So all this extra money was able to now float to the top. And that's why we have the extremes of income and wage inequality, just like we did at the beginning when this kicked off. And all of that money was printed, though it was based on the amount of gold that we held in deep storage, when the Federal Reserve was installed, and they could then print like 2.4 times the amount of paper to the gold that they held in storage. They inflated it away. So that is probably the absolute best way to show you that gold is a proven inflation hedge. At the same time, when inflation is near 40-year highs. Now, it shocks Americans, the average wage earner. Is this going to bother the billionaire if it costs more to put more money to put gas in your tank, or to buy groceries, or to do anything? No, it's not going to impact their lifestyle at all. But it will impact those that are making, the average wage, $51,000, $52,000, $55,000 a year. It's going to have a very large impact on them. Look at what's happening in the stock market. Look what's happening to the cryptocurrencies. Stock market went up as they printed all this money. You all have heard about the Roaring 20s. Well, we had the Roaring 20s again. But it's about sucking you into a system that ultimately will rob you of everything. You gotta have this. You gotta have this. And this is a piece of paper. Or this, okay, there's something to it. I can't crumple them up. I can't tear them. Because true financial shields are made of physical gold and silver. True shields. You're going into a battle. You want a piece of paper? You want a shield. You want something made out of metal, something that can protect you.